South Africa's financial and economic landscape, Saturday, the 11th of July 2026. South Africa's financial and economic landscape on Saturday, the 11th of July 2026, is being shaped by stronger fiscal intervention at municipal level, renewed international investment commitments, and a growing debate over the country's medium-term economic outlook. In one of the most significant fiscal enforcement measures in recent years, Finance Minister has temporarily withheld the July 2026 equitable share transfers to 69 municipalities. The decision follows continued non-compliance with the Municipal Finance Management Act, including the adoption of unfunded budgets, persistent wasteful and unauthorized expenditure, and mounting debt owed to Eskom and various water boards. Several major municipalities, including the city of Johannesburg, Nelson Mandela Bay, Mangaung, and Buffalo City, are among those affected. National Treasury has stressed that the move is a temporary corrective measure under Section 216 of the Constitution, with funding expected to resume once the municipalities can demonstrate credible financial recovery plans and improved governance. Meanwhile, President Cyril Ramaphosa's official visit to France, taking place from the 10th of July to the 12th of July, has delivered a significant investment boost for South Africa. Around 30 French companies have pledged approximately 1.11 billion euros, around 20.7 billion rands, in new investments focused on infrastructure, energy, and digital transformation. The visit has also accelerated bilateral cooperation through a memorandum of understanding establishing a joint ministerial commission. While discussions continue on peaceful nuclear energy collaboration and improvements to transport and logistics, the country's economic outlook continues to present a mixed picture. While the International Monetary Fund has maintained its forecast of 1.1% GDP growth for South Africa in 2026, Standard Bank is expressing growing confidence in the country's longer-term prospects. Chief economist believes South Africa is steadily overcoming many of the structural constraints that have weighed on growth for years, particularly improvements in electricity supply, freight rail operations, and port efficiency. The bank forecasts economic growth to strengthen 1.7% in 2027 and 2.0% in 2028, exceeding the International Monetary Fund's predictions. However, the short-term environment remains challenging. The latest Pay Inc. Economic Index declined by 0.9% in June, marking its second consecutive monthly fall. The figures suggest that while structural reforms are beginning to gain momentum, higher fuel prices and pressure on household finances continue to limit consumer spending and overall economic activity. On the corporate front, property owner, best known for its portfolio for premium retail centers and ownership for the Sandton Convention Center, is reportedly preparing for a long anticipated listing on the JSE. At the same time, Accelerate Property Fund has sold its Four Ways land parcel and adjoining BMW dealership for 174 million rand as part of efforts to strengthen its balance sheet and improve liquidity. In the banking sector, sentiment around Absa Group has weakened following increased caution from analysts, contributing to institutional selling over the past 2 days. Despite this, Absa's corporate and investment banking division recently secured a major transaction by providing 5 billion rand in funding to logistics company Newland Group, highlighting continued corporate lending activity despite broader market concerns.